All right. Hey guys. So welcome to the September recap. Now, I mentioned in the previous video I wasn't going to be going over the entire month. It was only going to be these first 2 weeks, just because it was going to take way too long to review or actually make the whole PowerPoint on the rest of the month. It was gonna take a very long time based on the way I was doing it. I was going basically trade by trade by trade by trade, and then also in between, each video is about an hour that I make, hour 30. So in between there, I was looking for moves that I could have made or trades that didn't take, things that didn't do, and so it was just gonna take way too long. And I figured since we're already 2 weeks in, I might as well just get out what I have, which is pretty much the first 2 weeks, not even, and then start working on October. So I didn't really do too much in the second week. I didn't even get through the whole thing. I actually just went from the 1st to the 7th, I believe, and then from there I just started working on October automatically. So unfortunately, we're not going to go over the rest of this month. And there was really bad trades here that I should have reviewed. I could have just done the top trades, but I guess for a monthly recap, I would like to actually analyze trade by trade by trade as to what I did, trades I missed, ones I could have taken, things like that, things I did right, things I did wrong. So let's go ahead and jump right in. Okay, so pretty much what I do, my routine is I get up and I look. The first thing I do is look at the watch list. So I have trade ideas for my scans, and the first thing I look at is the gap scan. From there, I start analyzing the charts. I start looking at support resistance lines. Sometimes I don't even get to, and then right after that, when the market opens, that's when the Momo scan starts going off, and that's where I just jump right into whatever stocks hit in the scans. Now, I don't always have time to put lines on the charts and everything, especially if they're hitting the Momo scan, just surging, surging, surging. So I don't always have the time, but I try to do what I can, pre-market through the gap scan. But usually the gap scan is the one that I'm going to be trading anyways, so that's usually the stocks already on there when they come to the Momo scan. Patterns I look for. This is pretty much like a summary of the top ones that I look for. I'm lying. I don't really look for cup and handle too often. But I would say symmetrical triangle, ascending wedge, descending wedge, whatever, are the ones I look for most often. And then obviously I always draw my support and resistance levels beforehand or during the trade. So my strategy is pretty much I scalp based on pattern recognition or, like I said, support and resistance levels. But sometimes I notice in my trades that I just start trading within 1 minute candles or just on emotion, or sometimes I just jump in because I think it's gonna work, or I just wanted to do something that I wanted to do, whatever, and it ends up going against me. So some of the moves just don't make sense. Now that I go back and review them, I'm like, why did I take it there? Or I look back and see what I could have done different. Sometimes I'll just review it and be like, I'm not going to trade here, but then I see in the video I end up taking the trade anyways. I'm like, why? Sometimes it's right ideas, wrong timing, false breaks, choppiness. So it just depends. But that's pretty much my strategy. Is I look for a support and resistance level, either buy off that support, short off the support or resistance, whatever, then sell into resistance, or sell, if I can, into resistance. If not, just based on the level 2. That's where I'm primarily basing my trades off of, is the level 2 and the choppiness of that stock, I guess. So testing, things that I'm testing at the moment, which is another reason why I do have losses, and these are kind of counteractive actually. So I'm trying to manage my risk, but at the same time I'm trying to give stocks time to work. So for example, I'll be in a trade going long and it's just chopping, not really doing anything. It's kind of just back and forth, and I start like, I don't know, and then I sell for either break even, commission loss, or just like a small profit, and then it takes off without me. That usually almost always happens in my trades. Other times, like, it'll just be choppy. I know I should be selling, but instead I just keep holding to give it that time. Even though I can feel that it's going to come against me. I have no true indication that it's not going to work out, but I give it that time, and then it rejects or flushes through, and then I just end up with a big loss on top of commission. So these are kind of hard to work at the same time. It's kind of counteractive, I guess. But another thing I have been trying out is selling half, or even buying, adding to a position. So selling half and adding into a position is something I have been trying. My ads are just terrible, I have to admit. My ads are just not there. When it comes to selling half, I feel like I am doing a decent job on some trades of selling half, but I still haven't got it down to where I sell half and hold even longer for the move to continue or follow through with what I was originally looking for. I notice when I sell half, I sell the rest within the same candle almost always, just a couple seconds later. So I don't know. It's kind of hard to do all these three at the same time, for me at least, and that's one thing I noticed in my trades. So candlestick patterns. These are the ones I found most often, and the ones I like the most probably. So this pattern here specifically, I don't really know what to call it. I don't really know what to call any of these, if I'm being honest, besides the engulfing ones. But I just refer to it as a VWAP break. So we have a surge through VWAP. Obviously, the black line is going to be the VWAP indicator, I guess. You have a surge through VWAP, and the next thing you know, this candle here is the one I'm buying in on. So this candle is just, after showing that it can hold above VWAP, I go ahead and buy in anticipation of it breaking its last high. So whether it's on the 1 minute, 5 minute, I get in above VWAP once it shows it can hold, and then I just ride it till whenever. I just go for that quick scalp, basically. Same with the downside. So if it breaks through VWAP on the downside, retests on a micro pullback, I enter here, and then I look to ride continuation back down. So the 2 candle climb, these it's so hard for me to trade these. I don't ever really trade these, if I'm being honest, but I had seen in several of my videos that this was actually pretty common, or it was happening pretty often, at least on the bullish days. You get a massive surge, or just a good surge, a good climb. Then you get a smaller candle, still breaking its last high. Get another smaller candle breaking its last high, but it's just getting even smaller and smaller. Like the higher highs are just getting smaller in between. And this is usually where I want to short. This is where I'm feeling, okay, there's weakness. It's slowing down. It's getting heavy on the top, and I don't see why this would surge. Like, it just doesn't make sense to me why it would. It's just showing that weakness of it slowing down. But this actually surges almost all the time. Every time I've seen it, it just surges. I still have to figure out why exactly that is, but I guess it's just a kind of wedge almost. I guess I can look at it like that, an ascending wedge, and then from there just squeeze through. But I still have to do some more research on this move here, these two here. But I mean, that's usually what I'd seen on the long side for the most part. I didn't really see too many of these on the short side, but on the long side, I noticed you get some a tight range, start squeezing here, and then this candle usually surges. Now, like I said, I usually want to short it because I almost always think that it's going to break its last high and then reject as a false break. And so I usually like to get short here, but it almost always turns on me. It ends up not doing what I wanted to do, and I'm just kind of screwed. So I mean, those are kind of difficult for me, but they are candlestick patterns that I had noticed in the recaps that I was doing day by day. Engulfing candles, so these are kind of a common candlestick pattern that most people know. It's just, you get the, let's just say, green candle here, right? So it's an inside green candle, and then you have, let's just say it breaks its high, but then it just flushes down. It's like a huge red candle. So it's an engulfing candle over the previous candle, whether it doesn't matter, I guess it does matter the direction, right? So if it's green and then this one's just a massive red candle over the green one, then obviously the direction is going to be heading towards the downside. Same, vice versa with this one. If it's a red inside candle and then you get a large green candle overlapping it, then obviously the next candle after these two, I'll be buying in on, or I'll be shorting. That's kind of the idea between the engulfing candles as to what I look for, at least. Now, when it comes to the inside candles, these are also my favorites. So I love the VWAP break setup here, but I also love the inside candles. It's almost the same as the engulfing, but just the opposite, I guess. Opposite direction. So whenever I have these candles, especially to the long side, I'd say the long side is my favorite. It's kind of like a flag in a way, or a micro flag, if you want to look at it like that. you basically get in a large candle and then you get in consolidation in between before you get that continuation back to the high side. So it's just basically consolidation. You get that inside candle. It didn't break its low. It's not showing enough weakness to continue to the downside. So the next candle, the third candle in, basically where the arrow's at, is where I'd be getting in long for the break of this 1 minute high, or this previous candle high, but also this I guess high a day, especially with high a day breaks. I think this is one of the big ones, or low of day here in this case. So that's typically what I go for on, I guess, on the inside candle. I guess this would be considered a harami candle as well. So that's pretty much what I go for. These are the candlestick patterns that I find most often. But like I said, the harami setup here, I guess, or the inside candle and the VWAP have to be my favorite. Okay. So I also look for reversal and continuation patterns. So my typical one that y'all probably see me all the time, forming is a symmetrical triangle. I have to say the symmetrical triangle just isn't working out for me as much as I want it to. It does work out every now and then, but I wouldn't say it's enough to be considered reliable. I'm still going to continue drawing it out. I think the more indicators I have, or the more patterns I find, the more confidence I'll have in the trade. But I think what the mistake I'm making is I'm getting in early in anticipation, because I know the way you, I guess, trade the strategy or trade the patterns is you get the break. Let's just say on the symmetrical triangle, you get the break and then you let it retest and then you get the surge. The problem with that, as what I found in my trades at least, is we don't always get that retest. We usually just get that huge climb, and then by the time I'm about to get in on a pullback, like it's just rejecting false break, or it's just going without me, or just not continuing the pattern, not continuing the trend, and it starts going back to the downside, and I miss the whole move in general. So I never get that true symmetrical triangle like retest on this level here. Usually on the downside, I mean, I would say I get it pretty often, but to the long side, I can't. Maybe I just can't figure it out. So I like to get in early in anticipation of the break, and I think that's where I have problems, because a lot of the time it's an early anticipation. I end up getting the break, and then it's a false break flush through. And what I did notice happens more often than not is when if it breaks through, false break, breaks the low, the next candle opens and it surges all the way back up, and then you see it continue. That happens too. So it's kind of tricky getting in early for anticipation, because it's either going to go without you, or it's going to be a false break, or it's just going to kind of hover in that level and never make a move. So I would say these aren't that reliable from what I've found, just because it's pretty difficult to trade with all the choppiness, especially in this market right now. Maybe in the stronger markets it's not so bad, but as of right now, maybe I have to focus on a large time frame with symmetrical triangles or triangles in general. I'm not really sure. It's something I do need to look into more and consider. Now, double bottoms, I never go for double bottom. I mean, I'm lying. I do go for double bottoms, but usually I'm selling at this point, or getting out for a loss. If it's let's just say it surges, I'm long, and it double tops with the previous point that I had drawn out, then I usually just sell right there, because I'm like, oh, it double topped, and I sell. So I don't really use this as a buying opportunity. I'd rather use support and resistance as a buying opportunity, or going long. But I can't really say I look for double tops, double bottoms often as an entry. I would mainly look at these for an exit, in my case. We do have the wedges as well. So these wedges, I do look for these quite often. These, I would say, work out a lot more than a symmetrical triangle. They're still not like super successful or anything, but the wedges, I think, or these triangles, I guess, are another one of my favorite patterns to look for, just through a break of an area. So if we're getting consolidation, or we're trading below a certain resistance level or support range, then I usually get long or go short for these breakthroughs on these levels. But again, it could fall back on the same thing as a symmetrical triangle, where it breaks through, false break, and just rejects the downside. So that's why I usually, with these, I go for a quick scalp almost all the time. And the last one would be the bear and bull flags. Similar to a symmetrical triangle, like the bull flag, I have such a hard time finding bull flags to the long side. Sometimes I'm getting confused with some sort of wedge as well, like basically a triangle. Symmetrical triangle, I get them, it's like one and the same for me almost. But I don't really find bull flags too often enough for me to be like, oh, like it's so obvious, you know, let me trade and get an entry for the bull flag. Like I don't really see it. Where I do find them often is the bear flags. Bear flags, I can almost right away notice, hey, this is flagging and it's gonna go to the downside. And that's why I usually jump in short like right away whenever I see these, if it's easy to borrow. If it's not easy to borrow, then whatever. I can't take it. So but with the bear flag, with the bull flag, like I guess it's just poor recognition. I can't seem to find these often. It's usually always a symmetrical triangle that I'm looking at. So I don't know. I don't really focus too much on these. I would say if anything, it would be the bear flag that I prefer over the bull flag. But again, I'm long biased just because my broker doesn't have all the stocks easy to borrow. Not every stock that I can trade is easy to borrow, so I can't really short too often. So, oops. Okay. So we're gonna go over the first week, 9-1 and 9-2. This week I made $130 basically. And the patterns that I found in reviewing the trades was a cup and handle, bull flag, and a symmetrical triangle. So these are the ideas or patterns that I found prior to taking the trade. And we'll go ahead and go over the first one here with BIAF. Now, BIAF, I originally had my first target for the break of high a day. At the time, the high a day was around here, I'd say like 1150. So I went ahead and got in early in anticipation of this next 1 minute that was going to open to break through 150. Now, I undersold. You can see here that I actually undersold that position entirely. I did notice that there was a symmetrical triangle formation here, at least on the 1 minute, and that I did have support along this level. I didn't want to wait for this candle to form and then take an entry here on this candle, primarily because usually, or sometimes, not all the time, sometimes when I enter like on the candle in which I'm hoping is gonna rip, it usually just goes without me. Or I always tell myself like, wait for a micro pullback on this candle. So let's just say it dips to 1090, and then I take an entry at 1090, and then boom, get the surge. Sometimes it works, sometimes it doesn't. Most of the times it goes without me because I wait for that micro pullback or perfect entry, and it goes without me, and I don't like that. So I always enter earlier in anticipation, but I try to get in a couple seconds before the next 1 minute open, just because sometimes the last 10 seconds, 15 seconds, it does whatever it wants to do, and let's just say it flushes, and then I'm screwed. So I just get in early for anticipation of that. And so, like I said, the original target was a break a high day, which was this candle right here, the high of this candle. And I was going off of the 11 whole dollar support pretty much. So around 11.10 is where I had drawn my line based on the support. So I went off the high of this candle. It had just got out of a halt here, resumed lower, and then it surged up. Next candle opened, had a higher surge, rejection, and then it closed around the same level of this previous one minute candle high. Then this candle here, same situation. It opened low and then surged higher and then held support around, again, the 11 whole dollar level. So I just got in since it never broke below. It formed a triangle formation. It was off my support line, and I went ahead and got in for the break of high a day. Obviously, I didn't get the break of high a day. I undersold. I panicked out. Once I'd seen there was resistance at like 35 or somewhere around that range, I just panicked and I tried to sell as soon as I can, because I didn't want the trade to false break and then come back down. I break even or lose to commission, or even worse, it flushes through down to 1080 or even below that through VWAP, and I'm totally screwed. So things I noticed, I'm not going to go over all of these because this is just, you know, for reference later. But things that I did notice were like large spreads. This is just something that y'all can read and I can recap another time or something, but it's more for my personal notes just to see what happened, you know, to look back and see what stocks I'm trading, and like in terms of volume or float, whatever, see what I'm winning on, what I'm losing on. So here's a trade. I went ahead, you can see I got in at 11.13. That's where I entered. Next 1 minute open. it hits the 1130, 33, 34, 35, struggling, not moving. I'm trying to sell, I panic sell. And then right here, I actually closed my position at 1133 because I panicked. Next thing you know, it actually goes beyond 1135, hits 1150, 60, and I think it even goes to 12 from there, or 1229, the halt level. Yeah, so 1229 is the halt level there. It actually gets halted going up and surges through that level. So, you know, I'm in at 11, I don't remember, 11 something. We'll see right here. There, I'm in at 1113 and went all the way to 1229. That's over $1 share move there that I completely missed out on just because of my hesitation. Now, what I should have done was sell half. As soon as I seen that struggle there, I could have sold half and then stopped out the rest, break even, to get some sort of profit. And the reason I don't do that is because I start hesitating, or I get that fear of commission. The commission is what really kills me. It's like right here, if I sold half, well, that's already almost what, $8 for the trade. And then if I sell another one, that's another $5 that I lose out. So it's like 10 for a buy and sell. And if I'm selling half, it's like 5 every time. So each trade is basically $5. So my buy's 5, my sell's 5, and then I get another 5 just on break even. So I'm really taking a 15 commission loss if I did that. And that's what I didn't want to do. That's normally why I don't sell half, and it's not something I typically do. I usually just ride the full position, but with the full position, I start hesitating, getting frustrated, like, oh my god, and it's not working. I get antsy about it, and I noticed that's why recently I've been trying to sell half, or do what I can. But when it comes to adding, I'm just not there with adding yet. Adding is something I need to practice a lot more on for sure. So this is my favorite setup here. This is one I had explained earlier, the VWAP break. With PXMD, I made about 80 or 75 bucks on it. The target originally was for the break of 4. So I had seen that it broke through VWAP. I bought it immediately. I had previous support line drawn out here. So this yellow dotted line, based on its 5-minute, I had previous support. So it hit this level multiple times. And when it finally curled all the way back up here, broke through, I was like, okay, now's my time to enter. So I got in on this 1-minute candle. Once it broke through VWAP, showed it was holding, I went ahead and entered for the last 1-minute high break, or basically high a day at that point, and went ahead and got in. Another indicator that really gave me the confidence was the 5-minute MACD coming to that curl, coming through that cross level. I went ahead and felt even more confident through that range. So I went ahead and took position. I was going to go for the break of 4, but the reason I sold underneath 4 was because I was hesitant that if it broke 4, hit like 401, 402, that it would just flush all the way back down and I would lose on the trade, or I'd make almost nothing on it. So I sold into the surge through 4. I wish I would have held, because I think I had an opportunity to sell above 4, but I decided to undersell it. So better to be green than not be green, I guess, is the way I was looking at it. I was already up at my target, which is like 15-20 cents, and so I was like, might as well take it. But it was basically for the last 1-minute high scalp. So that trade's gonna be here. So you can see it's 92. I'm already in at 380 flat. 95, 97. I decided to sell right there. So we did get the break. I'm long there. We got the break to 89, and it wasn't spready, but it was choppy. As you can see right there, it went all the way back to 84. After it hit 97, went all the way to 84, and that already made me scared. I was like, like, I don't know what it's gonna do. I don't know what it's gonna do. It's already choppy, and I was like, I gotta take profits while I can. So I sold it underneath 4. All right, so the next winning trade was HPCO. HPCO, it was off a support line. So the original target for this one was the break of the last 1-minute high here. So the idea was to buy off support that I had drawn out on my larger time frame. I think this was the 10-minute. I had drawn support line further back here in this range somewhere on it. I cropped it out so you can't see, but there was other areas that it was hitting off that blue support line. So I decided to draw it right there, and it's the same blue line here on this 1-minute time frame. I decided to get in right after it broke its low. I said, if it broke its low, I'm going to take an entry like right away off my support line, and I'm going to wait for this to bounce. Now this just got out of 2 halts. So the first halt here immediately got halted again, opened like flat just about, surged higher, and then immediately rejected all the way back down. we get this huge rejection, but not a massive flush. So we don't get like a huge nasty flush all the way back down to 840 or something. It actually just continued here and held my support line. So I figured, okay, if this breaks a little lower, it's slowing down in this range, we can get long. And that was basically the idea I had. So it hit my support line, got long, and I undersold. Why I undersold this position, I'm pretty sure it's because I freaked out about this massive red candle. I didn't really know what to think of it. The massive red candle, I had no like true target. I didn't really know what I was doing in terms of, I knew buying off support, but I didn't really have a target. I wanted to break this high here, but once I see 950, I was like, well, 950 is typically like a psychological resistance. So I was like, once I see 950, like, if we break, it might not break to 960. It might not break further than, this last 1 minute high. I might just, hold this little range and then start breaking lower. So I decided to sell at 950, somewhere around that area, 955, something like that. Just because I started freaking out with the psychological resistance level. I wasn't sure if it was going to do it or not, but obviously it broke through, almost hit 10. That was almost $1 a share move here that I missed out on. So let's go ahead and see what this looked like. So I'm long there at 925, 300 shares. And I sold right there. As soon as it hit 955, I was like, oh, I gotta sell because it slowed down. I wanted it like to immediately break. So again, went ahead and bought in there, 925. It's already spready, so it already made me nervous. It's 36, slowed down at 36. I was like, I'm giving it too much time now. 40, I was like, okay, I'm getting lucky in the 40s. 47, slowed down again, like 50, big sellers there. Slowed down at 54, like I'm gonna sell. Slowed down 3 different times, and that's where I hesitated. I was like, I gotta sell, I gotta get rid of it. So that's what I did. I got rid of it, and next thing you know, it breaks. I didn't stick to my original plan, which was for the break of this last 1 minute high. Instead, I just hesitated, saw what was going on here, 950, 940, 930, and I just hesitated with the spreads and the price action. I just, took profit while I could. Unfortunately, I should have held through this whole ride, but I didn't. So that's just what happened there. Now our first losing trade, this was with CMCM. So same idea. I had seen a symmetrical triangle here, and it's kind of hard to say whether it's a symmetrical triangle or an ascending wedge or ascending triangle, because it is kind of flat up here. But this is after the fact, after it rejected. So at the time, before this rejection, it actually looked like a symmetrical triangle to me. And that's why I got long. I was like, oh, we're breaking out. So I figured we were breaking out and it needs to break through this high. I'll get in early in anticipation of the break, and then we're all good. So this is a perfect example of where it didn't work. I go ahead and get long. It broke and then immediately rejected. I couldn't even sell into that little break there. I don't think, at least. But I was expecting this to go to 650, and I was going to sell around 650. So I was in around 610, somewhere around there, looking for 650 practically. Break through this high here and continue higher. But I don't know, it just didn't work out. That's kind of the idea I had behind it. I wasn't trying to break high day either. I wrote down here, it's not high a day. It wasn't a high a day break. And this is the first one in which it wasn't high a day that it didn't work. So that's something that I had to keep in mind there. The spreads were also kind of bad on it, but like I said, the idea was to sell around 640, 650 after this break. So let's see how that turned out. So right there, hit 618. I had some time to sell, but there's already a big spread there. It was 618 by 601 for a second. So I'm long 608, 616. Then we get 10, 14. I'm like, okay, I'm holding. Let's look for the break of this last 1 minute high. 16 again, double top practically. 20, 24. Okay, I could sell here, but I was looking for that halt level at 643. I decided to hold a little longer. It was like, oh, we can do it, we could do it. And I just hit the bid right there. As soon as I'd seen it came back down, I hit the bid, sold at 608. So that was basically a break-even trade. I lost a commission. Now, NTNX, I don't have a video, I don't think, for NTNX. I might have one, I'm not sure. But this was, a massive loss. I didn't realize this until afterwards. When I was streaming, I reviewed the stream afterwards and started reviewing the trade. And someone in the comments on my Twitch stream had told me the reason I'm losing is because I'm trading in this range. And I didn't really understand what the range was that he was talking about. until I went back and reviewed and actually, started looking into ranges and everything like that, which is where I came up with the whole rectangle situation. That's where I started really looking into it, because I didn't even know that was, really a thing within these ranges. I wasn't sure how to use it. I thought that was for like large cap investments or something. I thought that was for large cap stocks. So I didn't really pay much attention to a range. But I did notice that it was popping above, and I had drawn out my blue lines here, as you could see. So I knew that it was trading within this range before or already, but I didn't really have an idea. I thought, like I said, on the 1 minute, there's a symmetrical triangle drawn out here that I had already drawn out. So these yellow lines are just the idea I had behind it. Like, okay, it's pinching in this range here, and we can go ahead and surge higher on this candle. But obviously, I didn't even take this trade. It just broke out. So this was later that I must have drawn these lines. But anyway, within this range here, I did notice that it was coming back down. So again, I thought it was a symmetrical triangle right here, a small one. And so I took a long, obviously false break, rejection. If I would have known that this was in a range, I wouldn't have got long here, because, for example, like 3 different times showed weakness, false break, hit the bottom here into this range. Next thing you know, I could have taken a long down here, bottom of this triangle, and then, it went all the way back up. Same situation here. I think here I got short. I figured it was going to, if not, I went long. I figured it was going to do something, and then obviously it was a break-even trade, and it didn't do what I wanted it to do fast enough, so I sold break-even. This one as well, I figured since it had a cup formation here, we're coming and retesting these highs. Perfect. I went ahead and got in for a 1 minute scalp over this last high, looking for a high a day, basically. Same thing, rejection. And then it starts chopping around, breaks its high, and it goes through the triangle that I had drawn out, and then rejection. So if I would have known afterwards that this was a small little range I could have been looking for, I could have saved myself from a couple losses here, like just in general. But obviously I didn't look for it. And like I said, this is the 5 minute pattern. This is basically what I had drawn out on my 5 minute, or I had thought of on my 5 minute, was we're getting tighter and tighter candles in a symmetrical triangle. I try to trade it within this one for the break. I guess I was based on the 5 minute, looking for that break through its last 5 minute high, and then also high a day there. So that's kind of the idea I had. I was just trying to get in early on the 1 minute in anticipation of the 5 minute high break. But the whole idea behind it was for the break a high a day through its 5 minute and also 1 minute early entries. Obviously that didn't happen. So now this is trades not taken within the first week that I was trading of September. Now after BIF, after I had that trade on BIF where I didn't sell through that whole surge, there was a bull flag here, or a flag formation. So we did get it did break high a day, and then it pulled back, held support. And this is where I was thinking of taking my entry. I just hesitated. I knew if it came back down through my support line, it could be an area for an entry, but I just hesitated. And really, my entry should have been on this candle right after. But instead, I decided, like, no, I for some reason, I felt I was too close to the whole dollar, and I just didn't want to take that trade. I felt that if we broke 12, it's gonna be like 1201, if not even break 12 and then rejection. So I just got really nervous. There's a spinning top candlesticks. I had wrote it down here as the takeaway. Spinning top candlestick formation here after a nice rejection. And we also had the $half support. So it obviously broke through and then popped back right above, and it finished green as a spinning top. And that was just a clear indicator for me to get long, but obviously I didn't take that trade. But like I said, I felt I was buying pretty high, and it had a previous rejection, so I wasn't really sure about it. Not to mention the spread. So a risk precaution, I also wrote these down. I'm probably not going to go over these, like I said, with the takeaways or whatever. But risk precautions that I had thought of if I were to take this trade would be a false break above 12. So as I just mentioned, false break above 12, and then rejection all the way back down to 1150, or breakthrough 1150 to 11. If not a rejection towards 1150 on the last 1 minute. So I wasn't really sure, and that's pretty much why I didn't take that trade. So this is the opportunity that I missed out on. It's already ahead of itself here. I'm gonna wait for this to load. So right here, I had all the time in the world to buy at 1186. I remember looking at it It doesn't show it anymore. It doesn't show it on the ask at least, but I remember seeing 1186, 1188. I was like, I could buy here, I could buy here, I could buy here. And then I was like, nah. And next thing you know, it broke 12, and I was like, well, I think it's gonna be a false break. Next thing you know, it actually goes for high a day, and I'm like, dude. So I missed the whole entire rip here. Look at that, all the way, I think to its halt level even. We'll find out. I'll find out in a recap. I'll actually go back and look at it. But that's pretty much what happened. I just hesitated after seeing that it held up. I was like, well, I technically have my 2-candle pullback, but it's not an inside candle. It actually rejected. And then this one kind of bounced above. Like, I don't know. I didn't know about the spinning top candle formation until afterwards, after the fact, when I was reviewing. So now I know if I see one of these, it's not a guarantee, obviously, but if I see one of these in a similar formation, it could be an opportunity to get long. Okay, another missed opportunity would be HPCO. So with HPCO, I did draw this pink line, and the pink line on the 5-minute, I had showed that this was previous support resistance multiple times. So you have this one rejected off this level, rejected off this level, rejected off this level. This one actually surged through this level, and then it actually broke through again. So I knew it was kind of respecting this line, which is why I had drawn it out here. And there was 2 different opportunities I could have taken. So there's one down here after a cup and handle formation under VWAP. And that's exactly why I didn't take it, because most of the times that I take trades under VWAP, they don't really work out for me unless it's a short. So in this case, I just didn't want to take it. I just hesitated. Seeing the cup and handle formation, I had seen it right away too. As soon as I tuned into the stock, I was like, oh, like I'd see this nice formation here, but I was like, it's under VWAP. I don't think I should take it. Surges up. Next thing you know, it gets halted. So surges up right above VWAP, and I could have taken this position as well, but I think I was talking, I was just distracted, and I didn't take this position here either. If not, I hesitated because I wasn't sure if it's going to flush through VWAP after such a massive move like that. I just wasn't sure, and I think I must have hesitated on it if I'm being honest. But went all the way up there, and I just watched it. Next thing you know, it hits my support line exactly, and then next thing you know, it takes off without me. So unfortunate. I also felt here I was getting in pretty high. It's around 11:30, I would say, 11:40, and I was like, well, we have the $half resistance there. I'm not really sure if this is something I want to take. It opened high, flushed lower, and then popped up off that level straight into a halt. So I wasn't really sure about buying the dip here. I wasn't really sure about it being such a good idea. But hindsight, I mean, knowing that it bounced directly off my support line, off the previous, support we had seen or resistance that we had seen, it was just kind of like, yeah, I should have taken an entry there. That would have been, even if it was at 840, 840 all the way almost to 60 here, halted up and resumed higher. Like that would have been a nice trade there. But I guess what I wrote here was that I was waiting for a VWAP entry. So I think in the video I was like, oh, I'll wait for this to hit VWAP, waiting for that perfect entry instead of just a micro pullback. I just waited for that perfect VWAP entry, which again, if I waited towards VWAP, that could have literally just broke through VWAP, hit 8, broke through 8, something like that. So I could have been wrong entirely on it if it did hit VWAP, but I don't know. I got nervous. Let's see. Okay. And then again, on the takeaways here, another reason why I should have bought around this level is because previously it did break through that level. So as we had mentioned in this slide here, it rejected, but here it actually surged through. And when it surged through, it had a really strong rip. Similar to what happened here, broke through, same situation, broke through, had a massive rip. So same with this one, massive rip, until it finally came back down and broke below, no longer respecting that support line. So this is the same exact situation, massive rip through, almost the same size exactly too as this one, broke through and then rip higher, but obviously I didn't take it. So this is the trade. So obviously I missed the first trade here. There's the break, there's 830, 840, 44. Next 1 minute open should be right here. 58, almost at its halt level, 65. 1 minute open, practically double top. Get that rejection all the way back down, hits my support line exactly, and then it gets right into a halt. I didn't take that. So right here, again, I should have got long 75. And I was telling myself in the middle of this too, it's like, I should get long, I should get long. I have my support line drawn out here and everything. And I was like, I should get long, I should get long. Don't take it. You know, I had seen the whole move and everything. I drew the line out, drew everything. There's no reason I shouldn't have taken that trade. But again, hesitation. I wasn't sure. And I had no confidence in that trade. So NXTD is another one I didn't trade. So I guess I was nervous for the rip of high day. I just hesitated here. This is supposed to be a short position that I was going to take. So the high day was this candle here. I had drawn it out in yellow. And I had two different opportunities to enter here. I was telling myself enter around 2270, 2275, somewhere in that range. I remember, I think, saying it in the video. I told myself, like, I should probably enter here. I'm pretty sure it's going to be a false break. I was pretty confident it's going to be a false break. And then if I didn't take it there, well, then perfect entry would be the break of 2250. That would be a second entry opportunity. Break at the $0.50, because if it breaks the $0.50, it'll for sure break this low and then continue down, and I can hit my first target, which would be around this yellow support line, or even lower, come down here to 2230, somewhere around there. Maybe even 2220. Like it just depended on what I was really gonna go for. But I had different areas of support or resistance in terms of, you know, going on the short side. So I don't know. I had already traded multiple times. It was within this range, and I was already, like I said, trading this, chop, just wasn't working out for me. So I was already frustrated, and I was like, although I see this short opportunity, I don't want to take it because I'm so frustrated. I don't want to trade in revenge trade on this stock right now, because I just lost 3 different times. I couldn't figure it out, and I don't want to get short, early, and then it surges on me through high day, the move I was looking for the whole time, and then I just get even more pissed. So I was like, instead of me causing myself a bigger loss, if it was, I'd rather just not take the trade and let it go without me in general. Next thing you know, it ends up going and doing exactly what I had previously thought about, which was surging through, false break, and a rejection all the way back down. I didn't expect it to reject so hard, though. I just expected it to go to 2250, break through 2250, and we can get a small scalp here where the yellow line's at 2240, 2250 area. So I was looking for that target, but it rejected so heavily. It's 2230, and then it actually went close to VWAP, almost touched VWAP for a bottom here on 2220. But I think right after this, it ended up surging all the way back up to 2280, and then I think it ended up breaking high a day eventually. So problem here was that I just failed to realize the trading zones. And this is kind of why I wanted to get short, because after a while I realized, like, it's rejected here so many times, like I would imagine that it's going to be a false break. Like I can just imagine. Obviously, since it rejected on this candle as well, I was like, there's no way it's going to hold above. But I mean, obviously I didn't take the trade. I could have also entered, like I said, here for a $0.50 break, so 2260, 2250 down here. Could have entered anywhere there, but ended up not doing it. So this is the trade. I'm telling myself here, take a short. 75. I can get in at 76. I can get in at 77. Like, take a short. I'm looking at the bid the whole time. I'm like, it's holding, but it's not really feeling like it's gonna go. So it doesn't feel strong enough to break high a day here. It should have already ripped. But I'm telling myself 65, like, take it. And nope, didn't take it. 50, take it. Nope, didn't take it. Went all the way down. If I got in at 75, it's already a 30-cent move, 35-cent move here. All the way down to 39, and then I think afterwards it goes all the way down to like 20. So missed opportunity there. Okay, so second week, finished down $520 this week. A couple of moves that I had noticed, a couple of patterns, I guess, were symmetrical triangle, ascending wedge, bear flag, bull flag, falling wedge, and rising wedge. Maybe, I'm not sure. We'll go ahead and look at why I wrote the question mark there. Okay, so obviously I didn't know at the time this was an engulfing candle. I should know. I have my papers here. I have all the patterns, candlestick patterns, everything here. I just couldn't find it in time, I guess. I just didn't even realize it at the time. But pretty much the idea was the same thing. We get an inside candle here after a massive green climb. If you go back to that candlestick pattern page, like I said, you get that one inside candle, and I'm looking for that rip through high a day or a rip in general. It's a perfect example where it didn't work. So the idea behind it was to break a high a day. We get this, large formation after a nice climb all the way up. We get a pullback candle here, inside candle, doesn't break the low, doesn't break anything. And I'm looking for the break of this last 1 minute high through high a day. So 2 highs is what I'm really looking for on the break. I was looking for it on this one to continue, but obviously I sold within the same candle because it just wasn't working. So I figured, okay, it's consolidation, makes sense, kind of a small micro symmetrical triangle here. Like we can go for that break. So that was kind of the idea. So I went ahead and got long at the top, basically. Kind of popped, rejected on me. So I bought the dip. And I had seen a psychological level here of support. So these 3 highs here, this one here, and this candle, well, the candle prior right here, it was kind of following this line of support, which is what I drew out here. So that's why I went ahead and added, because this is kind of what I seen without drawing the lines. It's kind of what I figured. Like, oh, okay, like if it doesn't break, I'll buy the dip for practically a double bottom here on my support. So I went ahead and bought the dip. Next thing you know, I should have known that this wasn't gonna work just based off the MACD. I didn't even see the MACD at the time. But it popped up. I saw it at 14. I said, this looks weak. It's not going to break 14. I sold it right at 14 at the top here. So I was finally able to exit. And if I knew about trading ranges or anything at the time, I would have, known that based on these 2 massive wicks already, or even this third one here, that it just wasn't going to work. So basically when I had seen it too late, 3 candles later, all these wicks at the top, I was like, this is not going to work. And I sold at the 14. So I got extremely, extremely lucky, because if this actually went down on this candle and it flushed through the low of this previous candle, then I would just be taking a massive loss there. So it was just a completely unnecessary trade, this one that I took. Like I said, it was kind of the right idea. It kind of worked, but false break. And that's just, that was my fault going for the anticipation of this high. So it just didn't work. It's not always going to work every time. And like I said, I tried to buy the dip. I was like super confident it was going to go break high a day here. Obviously it didn't work. So that's kind of the move. Let's see if I have the video here. So here we go. I buy in 1409, 1410, breaks the high, and now it's not holding anymore. So it broke its high, it's 14. I should have stopped right there, 14. Boom, gone. Instead, I decided to hold. I'm like, it's going to do it. It's going to do it. I can buy the dip. I'm waiting for it to... I haven't bought the dip yet. I'm waiting for it to come down at 1380. My support level here that I had thought of. So waiting. Giving it time to work. There it is. Show that it can pop back up. And I went ahead and bought in, added right there. Bought another 1,000 shares at 1384. Later on, I still give it time, all this time. And then I seen it come up to 14 just about. I was like, it's time to get rid of it. So I sell there at 14. Extremely, extremely lucky fill, because it never comes back to 14. It never came back to 14. So that was so lucky of me to get that stop where I had it for a very small loss, actually. Oh no, it was a gain. I actually made money on that trade. I got $73, but still, that was kind of ridiculous. That wasn't a good trade at all, I don't think. But the idea behind it, again, I bought a support. Really, I should have just waited. Bought a support. Obviously, missed a scalp at the top, and I got lucky on an extremely lucky fill at 14. So, okay, ATXG. This is a terrible chart. I think this is on the daily, actually. I'm not really sure what this was. If I had drawn my lines out, so there's a line here, line here, line here, line here of support and resistance. And this was basically a range in which it was already rejected. So we have one rejection here, and it was trading below that range anyways. So you have a rejection here and all these little rejections here. Same with this. We did have a spike through, but again, this whole area here is pretty much a bad area to be going long in, I guess. So this was previous resistance, basically. Now the idea behind this trade, if you go ahead and open it here, the idea behind the trade was to buy around the whole dollar support and VWAP. So basically what I did, so there's 6, it was fresh out of a halt, just, pulled back on me. I wanted to actually buy towards VWAP, but I was so late on it And the idea was to buy here and anticipate the surge through high at day, which was the previous candle here. Or actually, no, it was this high. I'm lying. Okay, so this high. So I was looking for a surge into a halt and surge through high at day, basically, buying that support. Just on the volatility and everything like that, the large spreads, I figured this can really pump itself through. And so I went ahead and I got a really good entry, rode it all the way to the top, 650. So I was already at 50 cents. That's $500 in that one trade off 1,000 shares here. 1,000 shares, $500 here. I should have just sold half, if not sold my full position. Instead, I went ahead and added up here. For some reason, I went ahead and added. I was like, this is going to work. This is where I'm saying my ads are just terrible. I added into resistance. The next 1 minute opens and immediately comes back down. And I'm like, oh, shoot. Pops back up. I think it might have popped back up and then rejected. And I'm like, oh, shoot, I got to sell. So I'm pretty sure it rejected first. And then it had a small little pop and I sold like right away. I was like, nope, I'm not going to risk it. Sold it. And that was, I think this was actually a loss in commission here, basically. If not, it was a small winner. It wasn't even worth adding because obviously I only made 149. This might have even been 1,000. This actually, I think I took 500 or something like that, something less. I don't know, 300 shares maybe. I don't remember what I took, but I mean, if it was 1,000, $500 right here, and then I just added for no reason, should have just sold after into that resistance there at 650. That would have been perfect. And it didn't even break high at day here. So the target that I have is just insanely ridiculous for the area in which I was buying. I should have been just going for this last 1 minute high into 650 and sell at 650 just about. But I mean, this thing was so whippy, so volatile that I thought it could actually go and rip through high at day here, 680. Just off of its strong curl and halts through Vue up here. So let's see what actually happened. So I'm in there, 602. 300 shares, that's what it is. So I'm exaggerating with 1,000. It's hovering around this level. I was like, I could add, hit 650, broke through 650, I add right there. Comes all the way back down, 620, 630. I'm freaking out, like, that was a terrible ad. What am I gonna do? I don't know. I could just sell it here. I'm still profitable in the smaller range. It's like, but no, I want this to break 650. I know it can. It's still hovering around 650, so waiting, 630 on the bid. I'm already down 20 cents from my ad. So I'm kind of just like, I don't know. It comes back to 650. And at this point, I'm just hoping this next 1 minute comes in clutch. So I'm just waiting. Pops above there, 64. I'm like, cool. I try to sell at 64, not filled. And I just hit the bid. So it's like, it's not going to break. So next thing you know, it surges all the way through. I don't think it gets halted. It might have gotten halted, but I mean, I should have added on that next 1 minute for a quick scalp through that level to the halt level. But instead I decided to add it within the same candle at 650 and just seeing where it was at here all the way back down. Like, oh man, just for me to add right there so late, like it literally froze at 653. It literally froze there and I decided, oh, let me buy. Makes no sense. That should have been an area I sold half, if not my full position. And that's another thing. If I have 300 shares, I just feel selling half with 300 shares is pretty much useless because I'm already losing on commission. I'm basically break even after 3 cents on 300 shares. Otherwise, I'm down $5 like automatically. And then with the sell, I mean, I'm down $10 on commission. So for me to just trade 150 shares, it to me is just like, nah, it's not a good idea. I just don't feel like selling half with 150 shares because I'm basically going to be losing on commission if it doesn't work out, or losing even more with 300. If it's 1,000 shares and I sell half, well, I'm already above the commission. Like I'm pretty much doing good. In general, it's just whether it works out or not with 500 shares. Like I see it makes more sense for me to sell half with a larger share size compared to just 300 shares, but I don't know. This was just a bad ad in general. Back to the topic. So I didn't go over everything from the 5th to the 9th, but this is just some of the stuff. So 5th to the 9th, basically to the 7th, I think is as far as I got. These are the trades that I didn't take during that time, that I hadn't noticed, at least from the 5th to the 7th. So the reason I didn't buy this one is because I was distracted talking and I just lost out on a short play. Oh my gosh, I remember this was frustrating. So I didn't know I was trading within this range, right? But I decided after this move had just happened, it was a 3 candle spike here, the 3 different wicks. I was like, it's rejecting off this level. Similar to the other stock that we had just looked at, I think it was NTNX. I was like, okay, we rejected off this level multiple times. Time to get short, right? Popped up. I shorted at the top into resistance, so it was 14, just about right here. And I was like, I got a short, so I shorted it. Perfect entry. This was such an amazing entry. Rejected all the way back down here. Should have sold it. Almost exactly the same as ATXG here. I added. For some reason I added. I was like, oh, okay, like now we're below support. I had drawn this support line here. It's like we're below support. It's gonna pop back up, retest. I'll add into it in anticipation of this next 1 minute breaking down to 1350, 1360, and then I'll sell into that resistance there. So I added. This thing ends up holding, and I'm like, okay, well, that's all right. Like it's holding, I get it, but you know, it's maybe this next 1 minute. Next 1 minute ends up doing exactly what I wanted it to do. It broke lower, hit 1360 just about, or 1362, somewhere around there, into my support basically, or the first target, and I didn't sell it. Instead, it went all the way down, popped up. I think it had some time down here. I had time to sell, and then it popped up 1380. I was like, ooh, like I don't know. Didn't break that level yet, and I ended up selling for a loss all the way up here. So it didn't break that level. I was like, let me give it some more time. For whatever reason, this should have been the first indicator to sell my position entirely, get out of the trade, because it obviously held support and it wasn't breaking lower. This candle here even should have given it away right away. You know, it couldn't break its low. It made a higher low. It didn't break the top, but there is an ascending wedge basically forming here. I don't know if that's what you'd even call it, because an ascending wedge is usually, you know, on a climb. So this is kind of the opposite. I don't really know what you'd call this. But anyway, this 1 minute right here should have given it away like instantly. Hey dude, sell your position because I'm about to rip. Just because it made a higher low, didn't break its high, but for sure it was forming some sort of formation here, a triangle or something. Next thing you know, this next 1 minute, it rips on me, and I decide, well, I could sell, but I mean, maybe it's gonna double top. I'll wait for it to pull back, and I'll get out on a small pullback. Next thing you know, it pulls back a little bit. I stop out my entire position for a loss, a massive loss actually. And I think eventually it does end up breaking lower, but I should have got long once it held support. So I should have just taken my profits here. I would have taken a small loss in commission here, or just a small loss in general, but I still overall would have been green on it, and then flip long, because this was an obvious time to get long after it made a higher low. And it was, like I said, I had already drawn out my support line. It was eventually going to start breaking higher. The reason I didn't swap long immediately was obviously because I was distracted talking. But my short, I was just so on a short bias that I was like, oh, there's no way it's going to go long. It's probably going to false break. And that's exactly what I was doing here. I was waiting for it to false break and then come drop all the way back down to 1360, retest these lows, and go flush through to 1330 or something. But obviously it didn't work. So I even wrote it here. Thought it'd be a false break, and it didn't happen. So I don't know, that just kind of sucked. I should have flipped long here. That should have been an obvious trade. Short was perfect. I should have sold down here where I had the opportunity, and then flip long right after. But you know, after seeing these two massive rejections, I was like, there's no way this thing's gonna rip through high a day. Like there's no way. And next thing you know, it ends up ripping. So oh well. Let's go ahead and watch the trade here. So I don't really know what I'm recording here. Okay, so right here, 1383 by 85. I was like, I should get long. 88 comes back down a little bit. I'm like, I should get long. I should get long. 86. I don't know. Next thing you know, I think I put an order out. No, that's an order to sell. I'm still holding in my short position. It's my order to sell, and I'm like I'm stuck in it. Next thing you know, it rips. It's ripping. Breaks through 14. 1408, 1410, 11, 18. I'm like, man, I'm screwed in this trade. I'm gonna wait for it to come back down to the whole dollar here, basically. Next thing you know, it comes back down. I end up selling here, so sold for a loss there. Really, it would have been a nice long in hindsight. Here's another trade. So here's another. I guess I didn't review this one. Let me go back. This 5 minute trade, I think. Oh no, it was the same 1 minute, 1 minute formation. So this was just after that. So I sold for a loss, and right here I should have got long. It was a inside candle, so there was a red candle, and then you have another inside green candle off the whole dollar support. I was like, this is perfect. I have support, my support line drawn here, and support line drawn here. This is perfect. But I didn't take it again. I was distracted talking, and I just lost on a short play. I didn't feel like flipping long right away in anticipation of it breaking its high day again. Or just, you know, trading off of revenge here. So I didn't take this trade either. But it immediately rips from 14 all the way to 1430, and what a trade that was. So right here, let's go ahead and watch. Wait for this to do what it needs to. I think it actually rejected and came back down to 1360 eventually. So there's 07, could get in, could again. 1405 could get in. 1402 could still get in. It's retesting this high here. 1407 just about. Takes a while, and that's why I'm hesitating, like, oh, I don't know. Broke 14, back above, but it's still holding overall at the whole dollar. And right when I'd seen that, that's where I should have got long there. 1408 all the way to 30. So massive seller at 30 on the bid. I don't know if you all were able to catch that. There's a massive seller at 30. That would have been the time to, like, hey, let go of my position. So it's about 111,000 share seller, I think. But whatever. Now, these are changes I've considered to make, or, you know, improvements I'm looking at, like areas I could, you know, do things differently. So I went ahead and looked at all the variables that I could control, or that were already controlled, like something that's fixed. So one thing that's against me already is commission rates. I don't have a choice. I have the scanner fees, I have the monthly platform fees. All these are already stacked against me. I'm primarily long biased because most of the stocks that I trade are easy to borrow, or not easy to borrow. So I can't be short very often. So I'm kind of stuck on a long bias. Sometimes my charts act funny. Sometimes my charts won't load, or something's glitching. Just how we had seen Friday. It was the first time it happened to me, but still, I mean, it's a situation regardless. Where I couldn't even get long or short. I couldn't exit a trade. It was just, I couldn't cancel any orders, random fills. Right, so things like that, they're already against me. It's just I have no control over it. It's just something that's going to happen regardless. And I went ahead and calculated it for the month of September. I had a total of basically 1,700 in trading commission fees. So all my trades stacked, you know, all together, whether it's a win or loss, doesn't matter. The fee in total for the commission, or the fee in total for the trade, came out to this total here, which is basically $1,700. And I was like, damn, that's a lot, a lot of fees. So, and I was still negative, like it didn't even matter. Even on a positive month, that's still a lot of fees. Compared to Thinkorswim, I wouldn't even be getting hit with like anything. It'd be like $50 or something. But I don't know, because there's still, I think, small fees per trade or something with Thinkorswim. I'm not really sure. I just know when I was doing options, I would still get some small fees, but it didn't even matter. So insignificant. But things that are in my favor with this broker specifically is that I can get 2 to 6 leverage margin. That's probably one of the big ones. Now, I don't, obviously using margin isn't the best idea, especially if you're really pushing it. But it does give me some sort of leverage or ability to trade higher price stocks in a larger quantity. So I could potentially make more with a larger share size on specific stocks, or I can trade small size on larger stocks in the $20, $30 range. So that's kind of like why I think this is a plus for me, or it's in my favor. And I'm also able to avoid the PDT rule for accounts under 25,000. Obviously, if I had 25,000, I wouldn't be trading with, you know, the broker that I have right now. I'd be going with some other American broker, such as Lightspeed or Thinkorswim or something like that. I also have destination routing, so I can route specifically towards, like, let's just say ARCA or NSDQ, whatever. I can route specifically to these guys, and I had this feature on before. The problem that I faced with this was that I wouldn't always get filled, and certain stocks, it would be like several cents out. So
if I try to sell on the ask on a surging stock, it would be, let's just say at 315 to 320. I'd be selling at 320 with a 320 sell order, but the stock would hit 315 because the closest one was 320 that I could get filled on ARCA or something, let's just say. So sometimes that would cost me. And I just decided to change it after some time to smart routing. I think smart routing, I think you get worse fills, if not worse entries or whatever, just in general. If not, you get higher fees for the ability to enter and exit per market maker, I guess, immediately. But I don't know. I don't remember how it went with that one, but I decided to put a smart routing because I got tired of not getting filled all the time where I wanted with a direct route. So let me see. And I can also trade pre-market. So I can trade pre-market, but the reason I never trade pre-market is because apparently I've never tried it with the live account at least, but apparently there's not enough volume pre-market to actually get a fill. So like I could place an order, but I'm at risk of not getting filled on a sell or exit order just because what it's called, there's not enough people trading during that time. So that's why I usually just wait till open because there's so much more volume at open compared to pre-market. And then sometimes pre-market's pretty choppy or just slow, and I don't really want to take that risk unless it's just really ripping. But I don't know. I know a lot of people who trade pre-market and they actually make a lot of money and come into open, they're already set. But for me, I just haven't found that to be, where I should be trading, I guess. I also have hotkeys, so I'm allowed to put whatever keys I want, all the types of orders, so order types, so like a trailing stop, whatever. I can also have a stop order sets, limit orders, everything like that. And I also have an infinite amount of indicators I can choose from in terms of setting it up on the charts. But again, the charts are pretty wonky. Sometimes they're just trash. If I draw a certain line indicator or whatever, it'll just highlight the whole right side of my daily chart or 10-minute chart or something. Like, it's kind of messed up. So it's hard to say whether that's even something in my favor or not with the indicators. Now, psychological variables. Now, this is the biggest one I would say in terms of trading for me. Is I have all these stacked against me, and I'm sure there's more. It's just these are the ones that I noticed right away. The fear of losing is the biggest one, but I would have to say pressure to succeed is one of the top ones. Is I want to make it, I want to do it, but it's just not working, and that gives me frustration to take another trade and revenge trade, and I'm just getting all this accumulation of frustration just trying to succeed. I want to do this. So I think all this is starting to build up, and it's just every day I wake up, I'm like, oh, like I might lose again today. Or ever since, if I take a trade and it just doesn't work and I already lost, well, I'm like, oh, like now I have to dig myself out of commission and the trade. And now I have to, really try to get an even bigger trade in and take a bigger share size, bigger this, bigger that. And I'm just I overtrade sometimes. Like, well, this one didn't work out. Let me keep trading in this choppy range to try and get this big scalp in. So I noticed that the pressure to succeed is a big one. To make content as well, sometimes I feel like if I don't trade, it's just gonna be a boring video. And I notice that every now and then some of my videos, in which I don't really put much effort in, I'm just kind of like, I'm quiet most of the video or something. For some reason, some of those videos get tons of views in comparison to my other videos. And so every trading video that I make, I'm thinking like I have to make something happen. Like, well, win or loss, I have to make something happen because it's more experience for me. And that's the kind of the way I'm thinking of it when I'm in the middle of the trade. Like, okay, like if this is a win or lose, it's experience regardless. Why didn't this work out? I can review it later. But sometimes it's just, trying to make content because I don't want, the video to be so boring. But even when I look back at it, nobody really cares. Like, I think the average duration was about 20 seconds in my video. So nobody really tunes in and watches the full hour or something. So that's just a poor excuse here. So that's why every now and then I have like no trading days or whatever. But they're not very often, which I think they should be in terms of, being patient and really honing down on specific, well thought out trades. What is it called? Uh, Another thing is hope. So sometimes it goes back to what I had mentioned in the beginning of the video, of holding my stocks or holding my trades or positions longer than I should in anticipation of something happening. So trading on anticipation is another thing that's kind of wrong with what I'm doing. So I'm hoping that the thing's gonna bounce, or I'm hoping it's gonna do this, do that, or maybe if I hold it a little longer, it'll reverse in my direction. So that's another thing, a psychological variable. Work, just outside factors in general. So work, family stuff, friends, whatever. Like I think this is something that everybody has. A lot of this stuff, I'm sure a lot of people can relate to as well. But I noticed this whole list is basically what's going on for me. And I would also say the biggest one here is a small window of opportunity, based on time. So I only have from 8:30 to 9:30 to trade. That's all I have. Not even 9:30 sometimes. Sometimes it's just 8:30 to 9:10 or 9:20 maybe. Sometimes I stay longer, but every single time I stay longer than I'm supposed to, I'm usually putting out YouTube videos without thumbnails or without timestamps, and I'm usually late to work almost always. And I'm trying not to have that interfere with work, and then I lose my job type of thing, whatever. So because of the small window of opportunity, and then if I look at how old I am, and then this wanted to be my profession later on in the future, like I want this to be something I can really focus on. It's looking at the amount of time I have. If it's an hour a day, there's 252 trading days in the year, like it's 252 hours basically. And if I don't take the full hour, then I'm missing more time and less experience, all this stuff. So the small window of opportunity is what's also making me accumulate all this fear, or accumulate all this frustration. Psychological variables in the trades though is commission. Commission's a big one for me, because it's like I know once I enter the trade, I'm down $5. Once I exit the trade, I'm down $5. So immediately I know I'm down $10 right off the bat, regardless of where I'm at. And even if I'm winning on my trade, let's just say I make a 10-cent move with 1,000 shares, it's $100. Well, really it's $90. So because of the 10-cent commission, but if I have a 5-cent loser with 1,000 shares, that's a $60 loss. Go ahead and add that additional $10 that I just made. So that's $70. Really, I'm only green now $20 off a 5-cent loss compared to a 10-cent win. I'm only green about 2 cents basically, if that makes sense for y'all. But the commission is what really eats my profit, and that's why I'm kind of like it sucks, because I'm already frustrated just dealing or just thinking of the commission to start. And so that also gets me nervous of chasing into FOMO or false breaks. Should I take this trade? Like I already had a couple losers here and there. If I take this one, is it going to be a big loser? Is it going to be a false break, and then it's just a waste of a trade, adding more to my commission? Am I chasing the stock so late? Am I feeling FOMO? Is that why I'm taking this trade? Things like that is what I'm thinking of. But the real reason why I'm pretty sure I'm feeling these emotions here is because I'm unaware of my profit target, my stop loss, and my risk reward ratio, and a lot of the trades that I'm taking. So if it breaks high a day, I don't even know where to go at that point. If there's no other indicator on the daily, there's no other indicator on the 10-minute or hourly, whatever, that I can go off of, I don't know, at that point what my target should be. If it's breaking high a day, how far should I let it run? Should it be every half dollar, every quarter dollar, every whole dollar? Like the stock's pretty volatile, it could probably keep going. Let's just say the stock's not volatile. Can it even reach the half dollar? Can it even reach its next quarter dollar? Where should I go? Should I base off the level 2? I don't know. It's not having the profit target or stop loss after something like I said, high a day, low a day breakouts. Like it's kind of tricky for me to be confident after that point. Even if it does make that move, I usually undersell because I'm not really sure or aware of where to go next. But my risk reward ratio, I would say it's pretty bad. Like I always have a target of 15 cents, but I always have a loss of more than 15 cents, almost always, just because I let it, ride too long. Like every time I think about it, I'm like, okay, well, my max loss would be 15 cents on this one. That's already in my mind, like max loss 15 cents. But a lot of the trades in which I'm taking don't even go beyond 15 cents. They usually go like 8 cents, 10 cents, quick little like micro scalps here, basically. And so I'm not in on long, big momentum trades. I'm usually missing those, and I'm usually taking the in between or choppy little moves for small 2-3 cent scalps. And I don't even want to sell there because 3 cents is break even, basically. It's a waste of a trade. So that's why I'm kind of like, I kind of have to go beyond 15 cents, but it's basically a 1-to-1 in my risk reward ratio. I just know I don't necessarily have a profit target, but I do know what my stop loss would be, and it's about 15 cents. Sometimes I stop way below 15 cents. I stop at like 5 cents or whatever. If it's just not working, I stop out right away. Sometimes. But things that are in my favor, back to, the right side now. My Twitch community, my YouTube community. Y'all, leaving me comments below, liking my posts, whatever. It does give me that feeling like, hey, I'm doing this for some reason or for somebody who can relate at least, or maybe who can help me in some way. So y'all, coming in here and commenting on my videos and give me support in that way, or just in general, giving your opinions or your thoughts on what I'm doing right, what I'm doing wrong. Like, to me, that really does help my psychological variable there in that case. Small size trades on hesitation. So for example, the ones that I took 300 shares on that huge rip to 650 from $6. I was in at 602 and got out at like 650 something, right? Took 300 shares. I was super confident about it. And I was like, okay, we got this, right? I wasn't too sure, but if I took 1,000 shares, I would for sure undersell like dramatically. I'd feel too hesitant, and I wouldn't hold in that consolidation that we had seen. So I mean, small sized trades definitely help with my hesitation. But again, the problem that I'm facing with small sized trades would be the commission. I can make, a 10-cent move with 300 shares, $30, but I really only made 20. And then if I lose another 5 cents, well, now I'm negative on that trade. If I lose 5 cents and then stack up the commission, now I'm break even, if not negative, on the trade. Compared to 1,000 shares, I made 10 cents, and now I made $100, and I'm only losing $10. So, like, the bigger share size, it can be a good thing, but also a bad thing. If I take a massive loss with it, then I'm screwed. So that's the reason I take larger share sizes now in comparison to before. And obviously the confidence in structured trades. So if it's based on a pattern, if it's based on something that I had well thought out for a while, and I had already organized it on the charts and everything, those are obviously improving my psychological variables on that aspect. The more I study patterns, the more I study the market in general or get experience in it, obviously my confidence will start improving from there. But and just in the future, having this as a possible income, I know it's not necessarily a good thing to think about, especially now if it's your only income. That would just be terrible. I plan to diversify. Please don't understand me wrong. But it is something that I'm looking forward to, because stocks is just something that I got into initially because I was like, this would give me the opportunity to live a freer life, I guess. All I have to do is just wake up in the morning, trade, make or lose money, and that's kind of my day, like in the first hour, 2 hours, whatever. That was kind of the thought coming into this whole thing. Obviously, my thoughts have kind of changed. I still look forward to things like that, but I know it's not the best thing to think about in terms of relying on this specifically. It's a huge gamble. That's why I still have my 9-to-5 job, like, all the time. I haven't quit or anything yet, although I want to. Like, I haven't done it because I know it wouldn't be a good move. But these are the psychological variables I'm dealing with at the moment. So alternatives, things I could do differently. Current things in which I'm doing is, a lot of the time I would have to say, is trade on a gut feeling, on my intuition. If I see something, if I look at the level 2 and I'm like, it feels like it's holding support. It feels like it's actually going to fall down or like reject. I just get in and I just jump in on it. Sometimes it actually does work, But this is where hope comes in as well, because my gut feeling is telling me hold a little longer. It's going to bounce. Hold a little longer. It's going to keep ripping, or it might come back up. You could sell for profit. Like, you can do it, right? So my gut feeling can be a good and bad thing. And a lot of my trades take place on this gut feeling, and after years of trading, like on intuition, I guess, so psychological support, resistance levels and stuff, or if I just look at something, I don't need to draw the lines, and I kind of just have this feeling or know that, hey, this is going to happen, something that I can't really explain, I guess. Just trade on intuition. I'm also buying the dips, right? I stopped doing that recently, especially in this market, especially with all those flushes. Sheesh, those flushes definitely wrecked me the first 2 days in October. Those were absolutely terrible. So immediately I stopped buying those dips. Those just weren't it. So this is not something that I currently always do. I don't really like to do it unless it's above Vue Up and on a support line, I'd say. 1 minute high scalps are almost always the thing I'm doing. I'd say 1 minute high scalps, and that's because it's not even working, if I'm being real, not often. But it's also because I'm trading, within a choppy range, or I'm trading something which I can't recognize at the time. I look back in hindsight and now I see, like, okay, this is why this 1 minute scalp wasn't working. This is why this didn't happen. I'm always trading on support and resistance levels. That's another thing I'm doing. So these two are basically hand in hand, and trading patterns as well. So I guess these three are really hand in hand. I'm trading any pattern that I can recognize. Again, patterns don't do me so much justice, especially the symmetrical triangle. It doesn't always work out. So I don't know. But some changes I'm considering making. It's taking less trades. I mean, obviously I had $1,700 loss in just commission fees in general. So, I mean, over trading is a big problem. And if I keep, the more trades I'm taking, the more the odds are stacked against me in terms of commission. It's going to be so much harder to get a win out if I have 20 other trades in there, $200 in commission fees, stacked against me already. So, for me to cut back on that, I have to take less trades, more thought out trades. And I even put larger size trades here. It's kind of, like I said, it's kind of a gamble. It's kind of harder to know whether this is a good move or not, just because I'm sure you could still make it with small share size, like 300 shares. I'm sure you can still make a lot of money with just that amount, even on a low amount of trades. It's just, for me, doing the quick scalps in which I'm doing, for whatever reason, it makes more sense to make larger share size trades based on what I'm doing, I guess. But again, I need to have more carefully planned out trades or thought out trades in general and take less of them instead of over trading within the chop. And I do have a way to figure that out. Almost. I've been studying a lot these past several days, and I think I've thought of it, of a way to recognize where I'm trading in the chop, or at least, kind of looking into it. And I'll be putting that into testing, I guess, that come this Monday. So another thing is respecting my stop loss. If it hits my stop loss of 15 cents, cut it. There's no reason I should be holding it at all. If it's just holding, chopping in a range, sell it. I'd rather be profitable, or at least taking a small loss on fees or whatever, than be taking an even bigger loss than necessary. So that's it's kind of hard to say to respect my stop loss. I mean, my stop loss for sure, but to stop out on a trade that I'm green on already when it's kind of struggling around an area. It's kind of like BIAF when it ripped through. It's kind of holding, and I didn't stick to my original target, and then it rips through after I sell. It's kind of hard to say if I should respect the stop loss when I'm green on it, or it's not. My bad, not a stop loss. My bad. My profit target, or just consolidation in general. I should let it work itself out until it's break even at that point. If I'm green on it, I should let it work itself out until I'm break even, if not small loss. But then again, I don't want to hold a trade. I'm up 50 cents and then let it work, right? And then it just comes all the way back down, break even. That was just a huge waste of a trade. I could have made like $500 on 1,000 shares, but instead I'm break even on it. So I really got to figure out how I'm going to do that there. But it varies stock to stock based on volatility and its price action, I guess. But letting my winners run is basically just what I was talking about. Letting my winners run. So adjust to break even. If I'm green on the stock and it made the move that I'm looking for, adjust to break even. Or at least adjust to where I can somewhat still be in a profitable range, even if it's at the slightest. Have a new profit target. So instead of adding into my position every half dollar, quarter dollar, whatever, I should be selling half or selling into it. And when consolidation appears, I'll just sell the whole thing. So to me, that's what makes sense, I guess, and that's something I'm going to be testing on Monday or just this following week. And I shouldn't be trading the first couple minutes until a range formation has appeared. This is another thing I've been looking at, was the ranges, as I had mentioned. And one serious change that I can consider is just trading on a higher time frame. Now, the only reason I haven't already swapped to specifically just the 5-minute comes down to, again, small window of time. So I only have about an hour, or let's just say 30-40 minutes. And sometimes the open's just super choppy. So the first 2-3 minutes, or first 2-3 candles on the 5 minutes, 15 minutes gone already of my trading. So, and there's opportunities within those first 10-15 minutes of trading. And if I'm waiting for a formation on 5-minute just to get chopped out, let's just say it doesn't even work. Well, I mean, now I just wasted even more time. I wasted 20-30 minutes waiting for formation that never happened, or it's just choppy and it never broke out. So it's kind of hard for me to just want to move over to a higher time frame. I feel if I had like 2 hours to spend here and just wait it out, then yeah, I could trade on a higher time frame and look for a specific pattern, look for a specific formation, or trade within a specific range, based on the formation on the charts. But again, the 1 minute would allow me to get in earlier or at a better time for specific entries, because 5-minute patterns, 10-minute patterns don't always work out. So that's where it's kind of hard for me to want to do this one, but it is something I have considered. Another possible change was removing the training monitor. So I know I'm so focused on, okay, I'm in at 10.10, and then I'm out at 10.05. Oh, I just took a 5-cent loss plus $10 commission. Like, oh, I'm so focused on the amount I lost or the amount of money and just in general because of my trading monitor. But at the same time, I feel like I do need my trading monitor to kind of understand where I'm in at, so I won't sell break even or something. But if it's based on a formation, it could be a benefit removing that, because if I'm in, I do have those little triangles on my charts that show exactly where I'm in at and stuff. If I'm in, well, then I know more or less where I'm at, and that could just allow me to let the move happen, let the move do what it needs to do, and sell wherever I need to sell. I think it's because I'm looking at my position. I know exactly where I'm in at. Let's just say 315, and then if I see like, oh, we just hit 320, like, but it's coming down. I don't know, and then I just panic out, sell. I feel like that's kind of what's causing me to take small winners and big losers. It's because I'm too nervous looking at my trading monitor, basically looking at where exactly I'm in at. If I just went in blind and just on the formation of the candlestick patterns or just patterns in general and just traded just like that, maybe I would let the stock work and do what it needs to do, instead of being so focused on the level 2 as to where I'm at. And that's where it comes into removing the level 2 as well, or the time and sales. Because if I don't even know where I'm in at, like, I won't even really need to pay attention to those things. Like, I think they're good to have, the level 2 at least, and the time and sales. I think they're good to have, because if let's just say there's a huge seller there, I have no idea if there's going to be one based on the candlestick formations. Kind of like news, I have to know, if news came out or whatever, always be on top of that. But it's the same thing here. If there's a 20,000 share seller at 315 and I'm in at 310, it pops up at 315, the candlestick's formation's right, everything's right, and then we just can't break that 320 seller. I'm like, why is the formation not working? This is weird, and then it rejects on me, and then I'm pissed. So it's kind of like I could remove the level 2, I could remove the time and sales as well. and just trade based on candle formation. But I feel like the most important one would probably be removing the trading monitor, where I actually see exactly where I'm filled at, just to trade based on, you know, candle formations and everything, but also still have the level 2 to know where I'm in at. Now the hard part of doing this though is I already know pretty much where I'm going to get filled. Like I already know more or less where I'm going to get filled, just because it's already on the level 2. So for example, if I go back, let's see. So down here, I can already see I'm filled 300 shares at 653. So it doesn't even, I guess it wouldn't even matter if I removed the trading monitor, because it already tells me here, you know, 653. Let's see. Okay. But these are some things that I've been looking at, or even indicators. I mean, maybe indicators would be taking it too far. I'm not sure. I know you don't really need indicators. Some people are successful without them, but I only have one main indicator, which is the VWAP, also MACD, I guess. So actually, those are the only two indicators I have. It's the VWAP and the MACD. If you want to count volume as one, I guess you can as well, but really it's just MACD and VWAP. So I could remove them and just base it entirely off support and resistance levels, but I think the VWAP is an important indicator because it is a major support and resistance zone. So I think I'll leave VWAP there. MACD I don't necessarily need. I used to trade without it anyways, but I don't know. I don't know if it's something that I really need to consider. I'm not sure. But these are some other possible changes I've been looking into. Mainly just the trading monitor, seeing exactly where I'm in at, and instead of going off of that, focusing on my position and how much I'm going to make and this and that, I should just trade blind based on the chart and look at exactly what I'm doing in the trade, the formation, everything like that, instead of being so focused on, you know, the money. So with that being said, we're going to go ahead and look at, let me see, let me pull this up. We're going to run some tests here on a couple stocks, random trades. So we're going to sort randomly through these videos up here. I'm not going to go through all of them, but this is just something that I'm thinking of. This is something that I do. I run tests like this on the back end. So when I'm not trading during the week, or if it's after hours, I'm usually going back to my videos and I'm practicing trades. So like, for example, this one. I could take a trade here. I'll look at it and I'll say, okay, this is where I want to get in on. This is what I'm going to do. So I'll be watching it, looking at what I want to do, looking at the 5-minute here. I'm seeing that something's forming. I'm already seeing a formation here. So I'm already seeing a triangle formation. I could get long. There's 306. Long here, 306. I'm going for the anticipation of the break of this last 1-minute high over this high as well. Not targeting high a day, but just going for this break here. So 306. I guess here in the video I bought it at 303. But now it's finishing kind of low. I'm not really sure if this is something I want to do, so I'll probably stop out there at 303. So that was a 3-cent loss, right? So this is basically more or less what I do when I'm not trading live. I'll come back and start reviewing my videos, and I'll look at different things I could do. So if I come back to this day, let's just say I was profitable this day. We'll go ahead and look at this trade here. Now, what do I see here? I can be going for high a day on ALTX. 5 minutes kind of consolidating. It's there's an inside candle here. It's a doji. We do have support here, 350, 360, I think. So I can get long here at 69. Long there at 69, looking for the break of the high a day. I don't really know what high a day is. I'm assuming it's 72. 73 there. Now I'm green on the trade. I could just let it work itself out, so I'm still holding here. So although it's consolidating here, I'm still green on the trade. I could adjust to break even. So 69 is break even. So let this next 1 minute open. Let this next 1 minute do what it needs to do. I'll just wait it out till it's break even. 69 right there, stop break even. So although I did have 10 cents of profit there, just about, that was $100 on 1,000 shares. I basically stopped to break even, loss in commission, $10. So that's something that I could do that I've been thinking about. Now we have the rejection back down. Let's just get further ahead. We'll come back here. So obviously it pulled back there, went higher, sideways consolidated, ripped even higher. Let's go to another video. Let's go ahead and try out the same strategy, same thing. So this one looks like it's gonna be breaking lower here. It's not easy to borrow, so I can't short it. It is forming like an ascending triangle here, ascending like a kind of like a flag. So I could watch it in terms of that 1 minute flag. I keep moving my mouse up here because I'm trying to click the order window. So just watching it, just waiting. So I'd want to short it here. It's not easy to borrow, but I'd want to short it here in anticipation of this low break on this candle here, and then I guess my next target would be 17 flat. But it looks pretty weak here to me. There's a pop back up. Let's see what it ends up doing here. So here I flip long. And it ends up going higher. Now I flip long here, most likely because it keeps holding this little range. Overall, as I just mentioned, I think this is a short play. I think it's more to the downside than it is the high side. I drew a support line there, ends up coming higher there. Nice swap stocks, see if I come back to it. Okay, so this one I get long here. Held VWAP several times, holding VWAP. I get long. 10 minutes not there. 5 minute high already broke. See what happens here. So I got long in anticipation of its next 1 minute high break, or the previous 1 minute high break. So really I was looking for this high up here where I drew my resistance line to break through all these levels basically. That's pretty much what I'm thinking about in this trade. I took off my profit right there. If not, it was practically break even. So going back to this one, so BYND, I think this is the one we were watching. So boom, I'm long there, 42. There's a rip through 50. Now I could keep holding here for high a day. So we broke high a day there. Now I'm trying to sell. Start panicking here. Cancel and I try to sell again, 1755. I shouldn't have sold. I should have held and adjusted to break even, let this ride until I guess the next consolidation, because this keeps going 67, 68. Next 1 minute consolidation is where I should have exited out. So right here I was in at where 42 and it's already at 71. So if this 1 minute high broke and then rejected, that's the time to get out. Otherwise I can still hold here, sell half here, probably at 71, let the rest ride. Target next would be 18. So just let it work itself out, let it do what it needs to do. If it comes back to this low here on this same candle where I sold half, sell the rest. That's what I should have done here. Instead of just selling all of it right there, I could have even sold half at 1750 on that hesitation. Sold half, rode the rest, sold another half here, and then rode the last little bit towards 18. That's pretty much what I should have done. This is a perfect example of what I coulda, woulda, shoulda, right? Something that I could have done. So if we go back, so nice entry. I get long. Let's say 1740. So get long. Let me see if my sketch pad here works actually. Maybe I actually open it up. It's called Epic Pen. There it is. Okay, so we can go ahead and open this up. Okay, so what I'm looking at here pretty much is we just had this huge formation here. So there's a long triangle formation here forming basically a flag. So we have this long flag here. The target should be around the same as this here, basically to the high side up here. That's pretty much what I'm looking for. Now That's exactly why I shouldn't have sold. My main target, I can already tell, like I mentioned prior, was the break of this high day here. I knew that was the main target. As soon as we started curling up on this little ramp here, I was like, okay, I can get long, and the target would be break a high day here. But really, I should have held for this formation. So we have a long bear flag here, basically, or long flag formation. I should have sold based on this candlestick here, which is why I was saying once it hits 750 at basically a triple top here, I could have just held and sold half in this little range here. Jesus, okay, sold half here, then rode the rest all the way up to 1775. That's another area of resistance, or the next 1 minute. Once the next 1 minute open, sell half there or sell the rest there. Could have done something like that, but instead, as we had seen here in the video, shoot. So as we've seen here, I basically sold everything right there at 1755, and that was only 42 to 55. That was like 13 cents. 3 cents go to commission, 10 cents. It's about 50 bucks right there. When I could have actually wrote this, sold half basically at this next 1 minute, or even sold half there, sold another half basically here at 75, or that next 1 minute. I could have even sold half at that 1 minute. I think it would have been smarter to sell half at resistance there at 1750 though, where it was already kind of struggling. Sell half there, ride the rest out, just wait to see, and then adjust break even. Next target would be 18 basically is where I'd want to be selling. So this ends up going to 1790. I get long again here. So by this time, the wave already happened. I'm already catching FOMO here. My idea behind this is 1 minute scalp. Go for the 1 minute scalp. After a huge run up on its 5 minute, that's the idea I have. So I get in, stop out with a loss immediately, 500 shares. So that whole gain I just had basically gone on just this. So there's 11 cents. I made 13 cents. You know, it was a really nice position. I could have wrote that all the way up here, almost 75, let's just say. You know, 30-cent move, potentially 30-cent move. And instead I sold for a loss going for another scalp after the move already happened, high a day. I buy the dip here. I'm in again, 1770, looking for this next 1 minute, trying to anticipate the next 1 minute breaking its high through 18. So let's see what happens here. So I'm long there, bought the dip. Again, trying to go for that 1 minute scalp. In too early. Ends up pulling back on me again. Again, another flag formation here. So if I pause the video, get this out, it's another flag formation. So we have a little small flag here after its climb. Now this climb was way bigger than this climb, obviously. So now it's slowing down. We have two like staircases basically here. So I'm only imagining that after this one, if we even get a small third leg up, it's gonna be a smaller one. So basically a 3-point tap here. So there's 1, 2, and then another third one, and then we're gonna, you know, curl back down to the short side basically. But we already have 2 moves here. So we have 1 triangle, and then we have another one here, small one. Let's see what it ends up doing. Oh shoot, let's erase this, hold up. Okay, let's see what this ends up doing. So I already tried 2 times, took 2 back-to-back losses there, another 6-cent loss with 10-cent or $10 commissions on this stock. Next 5 minutes gonna open here, so I'd imagine I'm gonna get long again here. This is what I would normally do, is wait. So bought the dip again. I try to buy the dip there, 68. Trying to get long. Canceled my order. Hit my support line. So now it's pulling back a little too much. We gotta see it's back into the 70s here, basically. Or high 60s. Which I guess we're never gonna find out. So there I got long. So long here at 62 in anticipation of this last 1 minute high break. But at this point, it's pulled back too much already. Could potentially rip again, but let's see what it's gonna do. Sold there at 77. Now I could have kept holding because I'm still green on this, and I could be going for the 5, even 10 minute high break. See what this ends up doing. Still green. I'm buying long again. Sold right there in the 80s. So 2 cent move there. Didn't really get anything out of that. Still could have been holding off my first position here and sold half right there. So I could have sold half right here, 1780. If not the full thing. Break that low, I sell the full thing. So boom, still right there. So I still would have been profitable even at my initial entry of 62. Sold one at 70, half at 70, sold the rest at 80 there. So that still would have been a good 20 cents, 10 cents each move basically. That still would have been a good amount of green. Instead, here I'm fumbling the bag, buying the dip, which makes no sense at this point. And just like I said, we didn't get the higher high there. We actually got a lower high here. So in this level, we got a lower high than this one. But it was about the same idea. So you have a flag here, you have another one here, and then you get a small little one up here. And this is a perfect opportunity for a short, I think, because you have one. I think it's a 3-point setup, and that's what this is called. So 1, 2, 3, and then this one, I would imagine that it's gonna start curling back down here based on this 1-minute pattern formation. Now it might not, but according to that pattern, that's what it's supposed to be doing. We'll go ahead and see what this ends up doing later. So I'm buying the dip here. Starts pulling back further, and I basically want to wrap it up already because I already tried too many times. I'm already frustrated. But again, I didn't know that pattern until just the other day. I also didn't look at what I was doing here, buying into resistance basically. I already rejected once before. I'm buying in this range now. There's like a whole square here basically. So like right here, get a whole square range there. You have another one that was here, but it broke through and I was holding. Now it's just in this little range. So I had already drawn my line down here. I don't know if you could see it, this whole line there as support, previous resistance, and now it's finally breaking below and I'm too busy trying to buy it. So it's little things like this that I'm not capitalizing on, that I'm not looking into. Let's go to another one. We'll do one more. I think we already did this one. Go to this one back here, I guess. We'll go ahead and come back here. We'll go to the first couple minutes of this. Okay, so right off the bat, we already have our range here. So let's see. I have resistance here. I have a line drawn out there. I also have support here, line drawn out there. Really, I have these lows to go off of, and then just really this one low to go off of, pretty much. This is high a day, dude. Okay, that's high a day, and then I have this resistance here. So let's see what ends up happening here. So a high day break is going to be kind of difficult, especially with that 5-minute looking the way it's looking. Fast forward this a bit. I get long here. I feel it's holding. I could get long. Let's see what it ends up doing. So my long position ends up working out. I'm adding into my position for the break of 12. Not that good of an add, especially off that support line that I had. It shows that it rejected this level several times already, or that resistance level I had drawn out. So now it's not working. Hit 12 there. I got a lucky fill. No, okay, I guess a lucky fill, yeah, 95 there. So bad add. Maybe it wasn't a bad add actually for the break of 12. Just didn't happen in time. And then see, that's what I get as well. So I'm holding strong. I'm green on the stock. Never once did I turn red, I don't think. Oh, after my ad. So it was just a bad ad there, I guess. But the whole time I was green. So green. Let's just say I didn't add. Green, it's still, yeah, it's hesitating. It's coming to the 80s, whatever. Green. I could sell here in the 90s, especially right there where I just sold. Sell half. So sell half my position. I have 1,000 shares in there, or let's say 500. I'm in at 76. Sell half at 95. That's already a good, like 20 cents profit. And then just hold the rest for the break of 12. So we get the break of 12 there. 12.23. I'm still green. I could still keep holding, just wait for this to do what it needs to do. Break high a day there. Boom, right there, sell right for the break of 1250. I could still keep holding too. Just let it sort itself out. The next 5 minutes going to open. Next 1 minute's going to open as well. It broke below 50. Now it's hesitating. I could sell the other half. Double top there on the 1 minute. Could still keep holding, but at that point I would have already adjusted my break-even trade there. So bought the dip, looking for this to push higher, but by that point I should have adjusted to 1250, if not 1240 break-even trade on the rest of it. So really, what was 1176? If I had 500 shares, first I would have sold half. What, 12? Let's just say I sold half at 95, where I originally sold my full position. Sold half at 95. The rest, target high a day. Not even necessarily target high a day. Breakthrough 12, first target. As soon as I see that it's holding above 12, I mean, I shouldn't even sell because I still have 250 shares down here. I mean, it's still holding. Next thing you know, I should just, if it comes back below 12, sell the rest. I'm still green. Instead of selling my full position, I should have sold half. Let the other half figure out what it needed to do. Let it ride all the way up till whatever it was, 1250 something. And then on this candle, if it just didn't break immediately, sell the rest. Or if it broke through the $0.50, my next stop would be the $0.50. Now it comes into question, I guess, should I sell half or should I sell anything at each quarter or $0.50? Or should I just wait for this consolidation to happen? Because obviously it broke below here. It broke through 1250 down to 1240, down to 1235, even lower, I think 1230. So I could have just rode the whole thing and we hit what? Hit 1253 there, 56, 60. Right here it's going to break, sell right there. Boom. So right there, let's just say 42. I stopped out 42, stopped out late. Even at 1242, that's basically $150. Let's just say from 12. From where I was holding 250 shares from 12 all the way to 42, that's 42 cents. That's basically $150 or somewhere around there. Let's just say 120 with 250 shares, selling the rest there. So 100 something there, and then I get another 20-cent scalp with 500 shares. Like, dude, I could have been really profitable in this trade. Instead, I let this thing ride without me because I panicked out, sold the whole position. So that's something I was realizing that I was doing in my trades, was something like this. Now, it doesn't always work though. I can't really say that because it doesn't always work. I could have got long here as well. So even right here, I could have got long for the break of this high. So I could have got long up here, 1160. It's a little riskier because it's already a $0.50 right here. But I could have got long here for the break of this last 1 minute high in search of another high a day, if not another resistance level of the previous 1 minute right here. Could be going for the break of that high. It ended up doing it, and it did it perfectly actually. It broke through and then it rejected, and this is the first time which I would be selling. So opens here, still letting it figure out what it needs to do. Obviously it went higher and then it came back down. If it came back down past this level or even down here to my stop, like that would have been fine too. That's 12, right? So it broke through 12 and I would have got in, let's just say at 1160 in anticipation. That's still a 40-cent move in this range that I could have, done something with. Obviously it opened practically break even here, and then it rode through 12. But even if I held it through this entire candle and waited for this candle, even the low of this candle is barely like in the 80s. So that's still a 20-cent move here in this little range from 60 to 80 there. So still profitable in general. But instead, I'm letting my winners go too quick, like way too quick. This is like, it barely even hit 12 and I sold the full position. Oops, like, right? And it wasn't necessarily a bad ad, but adding right there just psychologically got me scared when it came down that low. I was like, oh, I need to be careful. My 15-cent stop, my 10-cent stop. Like, ooh, I got to be real tight on this. Came back down. As soon as it hit 12, I was like, okay, I'm good. Sold the full position. And I sold the whole thing like, okay, I made some money, But really, if this thing dropped, where was my stop? 1160. And my average was already up here, like, what, 1180 or somewhere around there on average. So if I let this come all the way down 1160, I'm taking an even bigger loss than my winner here. That makes no sense. So let my winners run, but we'll go to one more example on the most recent market. So this was on the 14th. We'll go to the 29th and we'll test if this is still true. So we'll come into skip a little ahead. We'll come over here into MOTS. Now I don't think I traded MOTS. We'll keep an eye on it. See what else comes up. Okay, ATX here. So it already made a move. Let's go ahead and look at what's going on here. So we have, this is basically our range. So this is the first area of resistance we broke through. That's good. This is the low day. So we already have a new high day here. Pulled back, and then next thing you know, it ripped higher again. Still no consolidation yet. First consolidation candle, but actually broke its high. So still no consolidation, true consolidation yet. I mean, we technically do have consolidation. This is technically a consolidation candle. Micro pullback, double bottom there. So we have a double bottom here, and then immediately surged, braked high a day one more time. This whole time, I don't think would be a good idea for me to get long, just because the only time I should have was for the break of this candle. If I got in at 335 here for the break of this pre-market high here, let's just say this was pre-market high. If I got in for the break right here at 335, and I just held it in anticipation of the next one, you know, continuing higher until I get into consolidation, that would have been from 35 here to about 45. Let's just say a stop out on this candle here. 35 to 45, that's 10 cents, 1,000 shares, $100, $90 really after fees. Now I wouldn't take this trade. I don't think I would take this trade. I mean, that's a level 2 or just double bottom here, reading off the level 2. But let's see what ends up happening further. I want to wait for this range to set up. I want to wait for something to set up instead of just chasing it here for a 1 minute scalp. So if I got long here at 65, okay, that's 3 cents I would have made, 2 cents now. Back to 65. And really I'm selling at 59 on the bid there. So 5 cent loss plus another $10, you know, that's like $60, 1,000 shares. Stock's already choppy. Stock's still making the same moves. Okay, so now we have an inside candle. Now we have a new form or new range. So now what I'm looking at here is basically, let's see. Now what I'm looking at here is we have a new high. We have a new support range, I guess, to go off of here. Or if you want to look at the inside of this candle right here as well, you can. But this one is what I'm looking at. I'm looking at these two levels here. So previous support now, I guess, in this little range here. And then we have this high here to focus on. That's pretty much what I'm looking at here. So let's go ahead and continue. Okay, so if I got long here, 65, let's just say I bought in long here at 65 for this high day break, what would have happened? 65. Still holding. Letting it work itself out, do what it needs to do. At this point, I should already sell because it's not doing anything. But I'll still keep holding. Let's see how this would actually do anything, especially in this choppy market the way it's been. So it broke a high a day. It's still a green candle. I'm still technically green on it, 67 there. But we get another 1 minute high push. Continuation through the highs. 67, 65 now, break even, sell for a loss there. That's basically what I would be doing. Now it's easier said than done, obviously. It doesn't always work out that way, but let's see what this wants to do. There's 68 now, 69, 70. I'm not on a big loss, and I didn't have to stop out there. Look at that, all the way back down. That's so bad. So 77, if I got a lucky fill there. So I would have been at 65, went up to 77, 12 cents. you know, if I even got that perfect top fill. Let's see what this wants to do. Technically, I would have been profitable barely on it, if not break even. So this entire trade, I would have been practically break even, especially with that choppiness there of immediate rejection. There's 70 again. So if I was still holding this at 65, I'm still technically green on it. I was only red on it for a small portion of the time. So back to 74. Let's see what this wants to do. Next 1 minute just open. And I would still be holding, like I said, back here 65. So basically right here. My stop would be tight. Let's just say 60, or let's just say, I don't know, whatever that is. So there's another push there. Jesus. Another push. I would still be green on the stock. So let's see. Let's go ahead and go back to that 79. It's a quick flash to 80 there. There was no chance. Well, there probably was a chance. It's just I had the line study drawn, so I guess I couldn't see on the level 2 of me selling in the 80s anywhere. But by that point, at this point, I would have sold half. I could have sold half at 70, whatever, 72, 73. So 65, 72, 73. Let's just say 1,000 shares, sold half there. That's let's just say 8 cents. 500 shares. It's like $30 something. And then sold the rest here. Kept holding it. Right, I could have kept holding my position and sold the rest up here in the 80s after it's rejecting it, or even sold it down here. Break even 75 where I last sold half. So would have got a little more commission fees, but I would have still walked away green $25, $30. So in a way, it's still, maybe the ATX is not the best stock to look at, but I mean, obviously nothing's going to be fair all the time. So I can't really say that. So right here, I could have got long again, 79. So let's just see if this works. 79. Stop would be 69. 10-cent stop, let's just say. Big bid there at 73. Break of the bid at 73, I'd be out for sure. So in 79. Stopped out 73 right there. Because I see the bids getting taken out. Stopped out. So I would have been a small loser. Still a loss regardless. But again, if I respected it at 69 and I didn't sell with 73, let's just say 73 did break. I mean, this thing could have gone to 67, but it could have also kept going to 61 to VWAP. I don't know. So it's kind of hard to say whether selling at 73 would have been a good idea. It didn't fully bust through. And so, you know, it's practically a double bottom. There's a huge surge now all the way to 83. I'm still long on it in reality, 300 shares to 75. So 75, I'm up almost 10 cents here. And I'm drawing out here an ascending wedge, ascending triangle. I'm looking for the break of this last high, most likely, especially on its 5 minute as well. I'm looking for that break of the high. So I'm still holding in anticipation of that break, potentially even through 4. But let's see, there's 84 massive sellers stacked there. Now I'm trying to sell after I see those sellers stacked. 86, 85. See what this ends up doing, and boom. So sold the rest there. Could have kept holding here. I could have kept holding. I could have even got long here, 76 in anticipation. I already drew out my triangle here, drew out my wedge. I could have kept holding at 76. So let's just say I got long there at 76 and I held. What would end up happening here? Get a high to 92, 76 is my stop. I'm still technically green here. Massive rejection, selling half, sell the rest, break even. So right there, sold the rest, break even. So the choppiness of this stock though, that's insane. Overall, I would still be green in the slightest if I had done these things properly, but I did take one green trade here, so maybe the idea that I have behind my trades is just not it. Now it's a reversal all the way back up to 394. So it's hard to say, but this is something I do want to put into practice here. I mean, like I said, if I still held my position and if I got on at 76 there, or 80, let's just say 80, did come down almost to 70 there. but I would still be green overall on the stock. With even with these massive drops it's making, these little pullbacks here, all this stuff. Let's see if it ends up breaking through 4. I don't think it's gonna break through 4. How weak it is. It might, but it's another pop back up here. I'm long there, trading in the chop at this point. Now it's making lower highs. So here's the highest, here's a lower high. It's making lower lows. It's not making higher highs yet. And then I just noticed, so right here I just noticed, oh, we're making lower highs. So now I'm like, shoot, what do I do? And then next thing you know, boom, it breaks through lower. So it's something I'm gonna have to test. It's something I'm gonna really need to consider because as I showed on the other stock that we were just watching in one of these other videos, it did do what I was wanting it to do. And if I just held a lot longer or sold half into these positions, you know, I could have kept a lot more profit there. And so I think that's something I need to work on. I think some of the trades, I don't want to say a lot of the trades, just some of the trades that I have planned out or whatever, I think it's the right idea, wrong timing sometimes, but it's the right idea. It's just I sell too quick, or I get in way too early in anticipation. So those are the things I want to work on. Those are the things I'm looking to work on, and it's just something I'm really considering at this point that I'll be putting into tests on Monday. So we'll go ahead and check that out tomorrow. Something else I'm also thinking of doing is waking up early. So I'll probably be waking up early just to be able to you know, basically look at the gap scan, see what's going on a lot sooner than it is, you know, if I just wake up at 8:20 or basically 9:20 for, I guess, the clock on the screen, but waking up at 8:20 and then just getting 10 minutes in and then, checking it, you know, making all the line studies, all that stuff. So, let me see. We'll go back to this one. Okay, and another thing I do want to mention, because I do respond to comments on YouTube and everything. I do respond to everybody as best as I can. But on Twitch, a long time ago, I stopped paying attention to my Twitch chat because most of the times it was just bots that would come in. And I do have people commenting every now and then on my Twitch chat. And I feel so bad because I don't ever respond to them. I basically just use Twitch at this point to I could just record my screen and then just export from there, but I use Twitch as an export thing, and I'm considering just moving to YouTube strictly. I just haven't tested it out on YouTube yet, and I'm kind of afraid if I set something up on YouTube, it's not going to work out how I planned or something. So that's why I keep streaming. I use OBS Studio, so it's kind of like directly with Twitch pretty much. I mean, I know I can get other areas of streaming there. I know I could just swap to YouTube and everything with OBS, but I just feel it's so much easier just to go off of Twitch. So I guess 2 platforms, I mean, it's just better for more of a social aspect, I guess, and then expanding my social reach. But with that being said, I did have multiple requests already, and I've rejected it many times just because I don't feel I'm ready to have a Discord server. But that's the next thing we're going to talk about, a Discord server. I don't feel I'm ready to have or host one because I don't feel I'm profitable really at all, or I know I'm not profitable at this point. And I don't have the proper strategy. I'm still in the learning process. I'm trying to get these things down and really get a good understanding for what I'm doing. And because of that, I never wanted to own a Discord server or sell a course or do anything like that because it's just I'm not reliable enough to be able to do something like that. But in thinking about it, I know there's several people in the comments that have reached out to me already, asking to help, give me ideas or support a strategy or something, and lead me in some sort of direction. And again, like I said, I've rejected it many times just because I don't feel like I should be hosting a server yet. But I've changed my mind. I've considered it. I actually uninstalled all my social media. I got rid of everything to strictly focus on stocks and study on this seriously. and Discord was one of the things I actually removed. But through a recent comment that I received, I figured, it's probably not a bad idea to get input from other sources, even if it's, good or bad. Just in general, it's other ideas. I shouldn't discredit anybody's ideas, just because an idea is an idea and an opinion is an opinion. I could maybe get something out of it, just in general, good or bad. So I decided I'm going to go ahead and open a Discord server as requested, and I already have it set up. Everything's good to go, and it's going to be in the description of this video and every video from now on. Moving forward, at this point, I'm going to have an open Discord server. Now, this is the first server I've actually owned, so I don't really know. I can get so screwed on this, but I don't really know how to set one up. I just kind of made something real quick, just off like a YouTube video or whatever. And so if you want to reach out to me personally, I won't always be responding on Discord. I don't use it too often, if I'm being honest. And usually I'm going to be at work, or it's going to be after hours in which I would be able to reply. I won't be responding during my trades either, and I probably won't be trading live in my Discord server or join the Discord. I'll probably just most likely still be trading on Twitch and exporting to YouTube, and I'll have that ability to respond there through Discord after hours. That's probably when you're gonna reach me, is after hours, sometime around 7 p.m. Central Time, or sometime after that, 10 p.m. Central Time. It's most likely when I'll be responding. So if I just missed your comments, or I just missed something, again, you can reach out to me personally on Discord through the server, or personally just in general, and we can go ahead and have a conversation or whatever we need, and support each other. I think it's a great thing that I've decided to change my mind on, and I think any input at this point, because obviously I'm not successful with what I'm doing, I think any input at this point would be helpful. And moving forward, I'm going to try and take what I can get, because I'm only giving myself till I'm 25 years old, basically one more year before I completely drop stocks, at least for now, day trading specifically. I'm still invested long term and everything, but I don't want to put my whole life on this as a gamble, and keep doing this till I'm in my 30s in my underwear or something with my mom and dad. So anyway, let me go ahead and pull up Twitch. Okay. So responding to the Twitch comments. Okay. Oh shoot, what did I do? Okay. So the point is to get better. Don't do it for the views. That's just extra. Doesn't. Okay, for sure. That's what I had mentioned previously. So he had mentioned, going back here. Okay, so basically, trading for the views, basically, to make content, and that's something I really understand at this point. Like, I can't be trading for content, because like I said earlier, at the end of the day, nobody really cares. It's me individually, and it's kind of like, if I lose, people like to see it, sure, but I'm not a huge streamer or something where it's like, oh my god, I lost 1 million, people can make fun of me type of thing. Like, I'm losing and winning, whatever. But at the end of the day, when most people go to sleep, they're not thinking of what I'm doing for the most part. So let's see. Learn measured moves for potential targets if you don't know where to take profit. I'm assuming by that you're talking about psychological areas. I'm assuming. I'm not really sure. Correct me if I'm wrong. But such as the quarter dollars, half dollars, or whole dollars. And for sure, nothing in trading works out. That's another thing he had mentioned. Nothing in trading always works out, and it's definitely true. Not every trade is going to be a successful trade. Not every pattern I follow or strategy I have is going to work out 100%. I guess the goal here is to at least get because right now, if I go to, let's go ahead and pull up my metrics here. I go to Trader View. Where's it at? Right here. So if I go to Trader View and I look at my metrics, it's basically 1-to-1. So reports just for October. So we'll go for September. We'll go to September. It was basically 1-to-1, like 50-50. But obviously September's gonna be different. I was looking at October, I believe. So okay. I have to look at October. I didn't export anything for September. So October, let's pull up the whole month. Okay, so obviously I'm on a huge losing streak. I didn't include, like I mentioned in another video, I didn't include the $1,000 losses that I had back to back basically. But if I go to win loss, no, detailed. Okay, right here. So my total P&L, my biggest, I guess I'm down like $400 on October, and not including the $1,000 days, whatever. But my average loser is way bigger than my average winner, just in general. In total trades, it's 14, but 7 winners, 7 losers. So it's basically 50-50. I used to be in the profitable side. I think my average was like 68 or 70. So about 70 something percent is what I used to have a couple years ago. But now it's, my strategy at that time just, I don't know. It's I fumbled the bag and now I can't get back on it. And that's the problem I'm having. So now I'm 50-50 and I need to get this up to about, high 60s, 70s, somewhere at least. Because if I can win most of the time with small losers, manage my risk properly and have smaller losers, then I should be okay. But okay, no measured moves are real targets. Measured moves are based on price action. Okay, I'll go ahead and look into that. I'll see what I can do in terms of researching that, and really look into where I should set a profit target. Because as I mentioned, that was a problem that I'm having here is having that profit target, unaware of the profit target, stop loss, risk reward ratio prior to entering a trade. Sometimes the trades happen so fast that I just jump right in and I'm like, okay, whatever happens, and just sell when I'm up at X amount, right? So that's kind of the idea I have behind some of the trades that I jump in just in anticipation. So for example, when I came back here, it's whatever, it doesn't matter. But anyway, so as I had mentioned, back to this, the Discord server is up. It should be running already. I'll go ahead and I think I can open it to public so everybody can research it. But it will be up. So if you want to reach out to me personally, you can contact me through there. And I will go ahead and see you all tomorrow. I know this is a very long stream, about 2 hours already. So I'm going to go ahead and wrap it up, review some more, still keep trading, practicing on the back end. I was looking into the orb trading strategy or the opening range breakout strategy, and I realized it's something similar to what I'm already doing, but usually that's limited to 30 minutes, and I usually stay for an hour or an hour 30, somewhere around there. So anyways, with that being said, thanks for tuning in, guys. I really do appreciate it. Those of you on Twitch, I do appreciate you all tuning in there as well. But again, I will be opening up the Discord server, so if y'all want to reach me personally, you can go ahead and join the server there and be a part of the community. So with that being said, I will see you all tomorrow.